What's up, everybody? Michael Silva here. The 10-year and the 2-year yield curve has went back to inversion. We're at minus 0.04. And we've talked about this curve here. The 10-year and 3-month has been heading very fast to inversion. Had a little bit of a bounce today, but we are starting to get more curve inversions. What does this mean for the S&P 500? That's what we're going to talk about on today's Stock Market Brief. Welcome to the show. If you're new here, we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Go ahead and hit that thumbs up button if you haven't done so already. It is greatly appreciated. Let's go ahead and get into why this is important here. Okay, first and foremost, let's think about financials. Financials are important to think about here given this environment where the yield curve is inverting. Why? Banks, they borrow short term, they lend long term. So when the curves are inverting, well, that's not good for financials. And next week, we got financials reporting on earnings. So when the time comes, we will be talking about what the options market is pricing in as far as an expected move goes for these banks, all right, or for these financial equities. All right. And some of these are large market cap weightings, which could put pressure, obviously continue to put pressure on the S&P 500. If you look at just a chart of the XLF, it hasn't really gone anywhere. It could very well be flagging right here. And we're below all those key moving averages. It's not looking all too good. You can look at the regional banking, not looking all too good. All right. This could be potentially basing, but you know, it also, like from a bearish perspective, could be very well flagging until we get that volatility, you know, catalyst, which could be potentially earnings to start bringing this trend to continue to the downside, right? Lower highs and lower lows. We will continue to monitor that. And this is important to note because financials make up a big portion of the S&P 500. It's very hard for the S&P 500 to perform well if financials is holding it back. And on top of that, energy hasn't been doing too well either. But all year, energy has been on a monster rip, creating some large market cap names within the energy. So if these start getting hit, which they have been, albeit there are some setting up to look like they could start bouncing. But if we start to see continued weakness, that will hold the S&P 500 at a lower level. It's going to be harder for the S&P 500 to find its foot, all right, or find its feeding. If you take a look at the S&P 500 here, we are within the middle of the expected move, right? We moved up a little bit today below these key moving averages, not too far off from the upper edge of the expected move. So watch that for potentially to get tagged here. We do have 2 more trading days left in the week, but remember, volatility, it could go plus or minus, right? We can still see some volatility to the downside. This very well could be potentially a bear flag, and if we get the market to, you know, during this earnings season, if the market interprets it as bad, we could very well continue the path down to lower highs and lower lows. Okay, so it is very important to be just mindful of all of that. If we take a look at the 15-minute time frame, we are somewhat being constructive here. The 5-day moving average is starting to flatten out here, so that's a positive sign, right? So this is a neutral, right? So it's more of a trend, not trend trading, more channel trading here. You can see it's kind of sloped up. We closed above it a couple of days, so that's positive. So what you need to see here is if we start getting above this, you know, 385 high, maybe that brings us back up to that previous area of resistance, which also coincides with the upper expected move for the week. If we start breaking down from these levels, you know, be mindful that it's always a possibility to still come test these prior lows too and the lower expected move. All right, volatility, it can go either way right now. And be also aware of the volume shelf profile here. Take a look here at these two volume just right here. Bam. Okay, this little profile can potentially act as a magnet, which we've seen countless times. So if the price does start coming back down and you're looking to potentially long it, that would kind of coincide right there with the 5-day moving average and this previous kind of like support area zone right here that could act as support. So that could potentially, what you want to do is obviously wait to see if it gets back up, and then you could potentially set up a stop and then see if price moves higher like that, or you just wait for that pop through the upside there. So that's kind of a way to approach that specifically. Volatility still remains rather high. It closed today at 2673, so volatility is still here. I will state that this has been kind of working out. We talked about this SPIP over GOVT where it gets above this rate of change, right? We measure that rate of change. Watch out because it's a leading indicator of volatility. We saw the pop, and then we pointed out, hey, but when it gets down to this low reading, we typically see volatility subside a little bit, and it's still holding down below this level, and you can see when we call it out, volatility has subsided. And if you take a look at the profile here, volatility, it's at the lower trend line right here. It could potentially move up, but also potentially watch for a breakdown to a lower reading on the VIX. So we will continue to monitor that one too as well. If you take a look at the Qs did tag just about, I'm going to call it a tag of the upper expected move. It might go back there tomorrow to test it. Keep in mind, we do have this downsloping trend line below that 50-day moving average, right? Just this could very well potentially start some sort of a kickoff rally for momentum traders, but just be mindful that this is also in confluence with the upper expected range for the week. If you take a look at the 15-minute time frame, when we got up into that area, we started seeing a sell-off. All right, it's been a very strong, couple-day rally, so the bid remains under the market right here, and we're still holding above that 5-day moving average, which is starting to incline, but it's rather neutral overall. So if we start pulling back down, start looking to see if that can hold as a level of support, that could line up with this volume shelf profile right here, so that could very well boom and create some sort of a bounce potentially as it works off these overextended levels. But just be tactical here, right? There's no clear direction. The trend is sideways, but when you look at the daily time frame, clearly we're in a bearish trend, okay? Just given the lower highs and lower lows. XLK was one that I was looking to potentially start a position to go short, and I was looking to do that more in the 132 to 132.50 range. We didn't get there, so I'll watch around for tomorrow to maybe start building it. But, maybe might play it up into around the 50-day moving average, build a position, and, have a stop just slightly above it. And if that's the case and we see some more weakness, cool, I'll catch a move to the downside. That's kind of how I'm thinking right now tactically, given the current trend is still down. So I want to look at these opportunities when the market rips higher to at least try to take a stab at it from the short perspective. It did almost get there today, but I just didn't initiate the trade because it didn't reach my level. If you take a look at the IWM, also back above that 5-day moving average, which is still declining at this particular point in time. I do like how this price action is kind of cupped right here, and then we pull back into the 5-day. It held as support. So if you do want to go long, you might want to look for a break above 173. Then you have a stop over here below that 5-day moving average, or below this low, or below that low right there. And that can give you, that kind of, by the right side of the U-turn, and then you could potentially play it into the upper expected move there. Keep mindful of also this volume shelf profile down here. So if the price wants to come back down here, that's more than a possibility. If it comes down, tags around this 169 region, wait for price, if you want to go long, to start coming back up through the 5-day moving average, and then you have a new area for a potential stop, or you wait for it to start getting back above 173. You got to play into strength in this environment, and you have to be very tactical given the current market conditions. If you take a look at what happened to the dollar continues to explode to the upside, and it just has not put the pressure on the equity market yet. It continues to put pressure on gold, on cyclicals, but I want to take a look here at the UUP expected move. This is the dollar index bullish fund, and you can see here we are getting outside of that weekly expected move. This might be getting a little too extended, which means that it might come back in here soon. Now, this is also kind of interesting to me because, well, it feels like people are flying to safety right now. All right, so if the market does try to pick up a little bit, hey, maybe people, get a little bit more confident, go into some individual names, whatever the case may be, and then the dollar starts to subside, right? It has already got a little overextended, and maybe that offers some relief on the gold, potentially gold miners. If you look at GLD, we are now a 2 sigma move outside of the weekly expected move, coming into prior areas of support. So that is something to continue to keep an eye on. Be careful here. RSI is getting overextended to the downside. MACD is pulling down. You want to wait for confirmed strength, but I do know some people that like to play into these aggressive moves to the downside if they're bullish for longer term in whatever the asset class may be. If we take a look at the buy signal, right, the CPC put to call ratio, we did get a pretty bullish reading here at 0.87. It starts to head down further, so that's nice. We'll see if the 10-day crosses down through 0.95 here soon. It hasn't done so yet, so the buy signal hasn't been confirmed yet. But on this way down, we have been seeing the market kind of move up, and we've talked about this divergence, how we had a high here and a low there, or a lower high there, where we had a low there and a lower low here, right? So that to me is interesting because typically you have the highs here coincide with the lows here. So when all of a sudden we had another low here, but it wasn't confirmed from the put to call ratio, now we're starting to move down to a potential buy signal. Hey, maybe it's the market telling us something that we might be getting some sort of summer rally. It's always a possibility, but just be mindful also, it always comes at a horrible time, these buy signals, because we're coming into this earnings season, which can throw things around. The old fool indicator has not fully crossed over yet, but hey, if it keeps on this pathway, it looks like it can start crossing over here soon, which could be a positive sign. I want to go into a couple equities here. I want to go talk about Tesla, right? Tesla will be reporting earnings here somewhat soon. And you can see here, price moved down very strong from the prior earnings. I believe that was the day, right? We call this one out on Twitter, actually, how it was kind of just like falling over like that. And then we had this big move to the downside. Now you're starting to see price consolidate here, which is also putting together a bear pennant, bear flag, and we are below some of these key moving averages. So, you know, it's something to watch. If we start breaking down through 650, hey, that can open the door for an extended move to the downside here in Tesla. So be very aware of that. Even if we get some sort of rally, be mindful of this 750 to 800 zone. Why? Well, you can see his prior support and prior support here. And then also, I remember talking way back over here where we had all this price consolidating. We had this big explosive move. So there could be a lot of, you know, obviously trap supply up in this area. So this could be a big area of resistance. If we come up there, it might be a potential opportunity to start looking for short positions. But right now, as it stands, we are just consolidating sideways in bearish context, which is not a good thing at this particular point in time. The next thing I want to show you is Microsoft on the weekly time frame. We're below these key moving averages. We're all below the 40-week, right, and starting to curl down. We just recaptured, actually, the 10-week, which coincides with the 50-day moving average. But this, to me, looks like it's potentially flagging, and this could be very bullish. So this might be one to watch, because if Microsoft, a big mega cap stock, starts heading up, all right, that can be good for the S&P 500. Remember, even if we go into a recession, stocks can still go up during a recession, all right? So if, you know, if financials get crushed, right? If energy continues to get crushed, but tech starts moving, okay, that's something to pay attention to, right? It's just more data that we need to be aware of, which that could very well hold the S&P 500 down. But, you know, big mega cap tech stocks that start rallying, that could very well help the S&P 500 a little bit too. So yeah, as it stands right now, it's coiling tighter and tighter. The MACD looks like it's about to start curling over for a potential bullish crossover. Still below that zero reason level. The relative strength line is starting to pick back up here too, and then also the RSI is starting to point back up too, still below that 50. So hey, it looks pretty good overall. If you guys haven't heard about the swing traders that I got going on with Patreon, you can join. No, terms associated with it. You can pay $9 a month. You can get access to some educational content that I post in there, but mainly I do swing trade setups, the chat community, which is awesome. I do, a weekly watch list. I update my watch list via Excel and PDF. We have expected moves where I track about 40 plus products, and I added some Chinese equities in there, like BABA, PDD, Futu, a couple other ones that I will be adding in there too as well. You can also, if you don't want to pay $9 a month, which I'm not much of a, by the way, the monthly type of guy. I do prefer the annually. This, you'll get a 16% discount if you do annually, which ends up being like $7 a month, right? But the reason also why is because if you pay $9 a month and you're too antsy and you want to just dive into positions right out of the gate, I don't really recommend that. You need to be patient, very patient with some of these trade setups given the current market volatility, and then position size correctly, right? Don't come into these rooms thinking you're going to make go YOLO into certain trades. And if you do that, I mean, obviously just be careful regardless of wherever you get ideas from or whatever the case may be. It's never good to YOLO. I'm going on a tangent here. That's all I got for you on today's episode, everybody.